Candlestick patterns are easy to identify when you apply each individual signal pattern or signal result to enhance the identification of a pattern. For example, we saw the big morning star signal in the Dow telling us the downtrend was over, and with the doji gap up strong morning star signal, best friend signal closing above the T line, that told us our first target was likely going to be up here at the 50-day moving average. When it hovered here at the moving average and did dojis, we also have the doji rule that told us which direction the market was going to move based upon the doji rule, indicating that the price will usually move in the direction of how they open after a doji. The fact that the Dow gapped up late last week and formed this candle was a good indication that our J-hook pattern was in progress. With that expectation, we knew that this price move right here was going to be the same magnitude as this move right here. What that did was allow us to be buying with much more confidence, knowing that the doji rule told us we are going to probably be moving in a positive direction, and the J-hook pattern also implied we'd be moving higher. We've gotten just about to this level, but if this magnitude of price move is same as this, that's a good indication that this level is not going to hold, that we're heading to the next level, which might be the trajectory of this existing trend. The same analysis can be applied to the NASDAQ. When it reversed and came up here to the 50 and saw sell signals, it was time to take profits. However, note that the selling was not very decisive. Remember, a doji represents indecision between the bulls and the bears. So it can be very simply analyzed that if they were selling or trading in here indecisively, that means they weren't selling off. They were just kind of hovering, or what we call bobble. And the fact that when they came up through the 50-day moving average the second time, you can see the J-hook pattern setup. The reason we can call this a bobble pattern is it's much more defined in the sense that we can see when the selling occurred and we can see when the buying came back. Also, noting that this wave right here should be the same magnitude as this wave right here. This allows investors to get into positions much more early so that when you do have situations where they're gapping up, you're already participating in those profitable trades. It doesn't matter what markets you're trading. As you can see in the soybean chart, there was your big morning star signal. There was your first profit-taking area. There was your J-hook pattern. There was your next profit target. There was your consolidation, and today soybeans traded higher, indicating a little bobble breakout that there was still more upside. Candlestick analysis is not developed for a specific market. It is the graphic depiction of what's going on in human nature, no matter what trading entity you're looking at. Recommendations on individual stocks are on the same basis. We recommended CVM because of the bobble breakout. And you were in this existing trend or trade based upon this information. And then you had a gap up bullish price move, which meant you were already participating in this strength with the market acting strong. It wasn't like you were jumping in at the end of an uptrend. Knowing that the market is trending in a specific direction allows the candlestick investor to identify where the strong price move or the strength of a trend is going to occur. As we can see in OLED, we started seeing buy signals, and there was our doji sandwich that brought us above the T-line, kind of confirming this fry pan bottom. It broke out right here. But was this selling off? As you can see, the indecisive nature of the sell-off told you there wasn't that compelling selling strength, allowing you to be prepared to be buying or staying long based upon the next price move. Because we can identify human nature in each individual signal, it allows the candlestick investor to be prepared to be in the next trade immediately, knowing that the outcome is usually going to be in the right direction of what they're expecting. That'll be it. We'll see you in the chat.